Sometimes you're just floating down the river of life and then boom, you hit a big mess. Now, we were actually looking for this mess, but in the real world, when an unexpected medical or disability condition happens, and it doesn't result in a somewhat timely death, we've seen such a situation financially devastate companies and families, as it's one of the messiest events to be unprepared for. You see, traditionally, life insurance pays a death benefit to your family or heirs when you pass away. This means that if the person covered under the policy experiences some sort of major illness, accident, or just a disability, all of that money put into the life insurance policy is about useless. Roughly 2/3 of Americans will find themselves in varying severities in a similar medical situation. And then to compound matters, short-term, intermediate, and especially long-term medical care, probably the most expensive service you can purchase in America. Depending on the condition, can be as high as $90,000 a year and rising. And that is why there are life insurance policies with living benefits. As the life expectancy age raises in America, so does the chronic illness rates. Financial companies know people are going to start to opt out of life insurance plans if they don't start to cover more of the risks that people are likely to experience first. And the three most common living benefits out there are critical, chronic, and terminal illness riders. These riders take the death benefit that you have, whether it's $500,000 or $1 million or $100,000, and mirrors that amount of coverage exactly for protection if you were to experience some sort of major illness like heart attack, stroke, transient ischemic attack, chronic illness like an affliction that keeps you from being able to walk without help or cook for yourself, and terminal illness. A doctor has pretty much said you're going to pass away within the next 18 months. Under these scenarios, you can make a claim on your life insurance while living, so that you can help pay for the care to clean up this mess. The more severe the ailment, the more money the company gives you. Up to 90% of the death benefit, the other 10% being left behind, paid out to your heirs if you were to pass away. And all that value comes at relatively little additional cost. We normally see $10 to $20 in additional premium versus a plan that just pays out a death benefit.